All right.
Hey, everybody. My name is Brian Gibbons, and I'm here with my good friend Michael McDermott. Hi, Michael.
Howdy.
Michael's an expert with business finance. And to me, especially being a business coach, I get very frustrated with people that say, I don't have the money to put into marketing, or I don't have the money to hire somebody part-time to support. Well, Michael's going to talk. I'm going to ask him some questions. He's going to answer them. We only have about 5-10 minutes here. But, basically he's an expert with retirement plans and pulling money out of your retirement plan, and actually cheap money, much cheaper than you can get at the bank. So, Michael, tell me, can you really take money out of an IRA or a 401k?
Yeah, yes. The short answer is yes. Now,
Okay.
with all this stuff, and you know how the tax code is written, I could go on about 20 minutes with the actual answer.
Won't do that. Well, most of my
IRAs
guys,
are restricted.
They just want to get some money out of an IRA or 401k. Let's talk about IRAs first.
Gotcha.
How would you get some money out of an IRA or a business loan for yourself?
You wouldn't. So that's a great question. IRAs, you're restricted. Yes, you can take what's called a 60-day rollover, but those are really dangerous. If you take money out of an IRA, planning on getting it back in 60 days, on the 60th day, that money's got to be back, or it becomes a distribution, 10% penalties, and along with your marginal income tax bracket.
Okay.
So the workaround on that is to take your IRA and roll it into a self-directed 401k.
Okay.
And self-directed 401ks are just the differences between putting on a jetpack and putting on handcuffs. So if you want the jetpack, get a 401k.
Well,
short answer.
We'll do another video about how the engine works and how the internal, how do you create a solo 401k? So the short answer is, if I got an IRA, I want to take some money out and start a business, we really have to change everything around and use another kind of retirement plan. And it does cost some money to do that, I know, but it can be self-funded to create the solo 401k.
It can be self-funded, right? Yeah.
You don't need cash out of your pocket to do that. And you do need to be careful and watch the IRS regulation as far as retirement planning. Okay, here's another question. I work for this company, and I'd really like to leave the company and start my own business. How can I do that?
Typically, if you're with an organization, you're going to either have their 401k, and again, I hate to split hairs here, Brian, but people say, I have a 401k. Typically, they don't. They participate in their company's 401k, so it's not their 401k.
Oh, all right.
But that can become your 401k upon separation of employment. So once you leave that company, that money is yours, and you can do whatever you want. Now, typically, people are uninformed. They roll it into an IRA. But if they roll it into a solo 401k, that money becomes imminently available to them like no other. There's just no other structure in the United States today that allows for this. So that's beautiful. You could also perhaps have a simple plan, which is called a simple IRA, or a SEP IRA. Those are very common for smaller companies. Again, upon separation of employment, that money becomes yours, and you can roll it to a solo 401k. And again, at that point, that money's imminently available to you.
Terrific. So now, I've been dealing with self-directed IRAs and custodians and everything else. So if somebody's listening to that and you know about self-directed IRAs and all this other stuff, and what's been popular the last 5 years is checkbook control IRA, where, let's say I'm a rehabber, I want to go buy a house, and I use my retirement money to do that. Can I do the same thing with a solo 401k? Can I do that?
Yes, you can. And it's much easier. When you're working with an IRA, even a checkbook control IRA, if I take my IRA and I use that money to buy a house, that house is in my IRA.
Right.
Okay? Right. And so I flip the house, and that money then from the flip is in my IRA, and that's wonderful. That's the way things should be. Let's kill mutual funds and let's buy houses. I'm all for that.
Okay.
But let's say that I want the money in my own pocket. Let's say I want cash for Christmas or cash for summer vacation. I'm going to flip a house and have some fun with it. That money is basically unavailable in the IRA environment. Whereas in the 401k environment, I have money available to me personally to use for my own benefit, not just my retirement plan's benefit.
Well,
so that would be the difference.
That doesn't make sense because they both seem like they're retirement plans, and you can't touch the money that's in a retirement plan for your own person.
Isn't that a wonderful thing?
How does that work?
God, we live in a great country.
Yeah, I know.
It works like this. 401ks have a provision called a participant loan.
Oh, okay.
And
I've heard of them.
So you can then borrow the money out to yourself. And if it's a solo 401k, if it's your own 401k, then you can borrow it for any purpose. You're the guy calling the shots on that loan. You let the plan know how you want to let somebody borrow. Well, you're the guy doing the borrowing, so you could borrow it for a flip. You could go on vacation with that money. You could go to Vegas and gamble it. Now, are there repercussions? Sure. But if you're using it for business purposes, and this is the beautiful thing, Brian, if you're using that participant loan for business purposes, and it is a loan, that loan incurs interest. You have to pay the loan back with payments and interest. And the interest that you pay yourself, Brian, is tax deductible.
Oh, my goodness.
Does life get any better than that?
No. That's awesome. And then one other thing that's in my head right now is there's incredible restrictions on borrowing money out of your 401k from companies. So if I go to I work for HP or something and I got $200,000 in my 401k and I want to go flip a house. And I go to them and says, I want to borrow $50,000. And they go, for what? And they go, flip a house. And they go, no. What do you mean no? Well, you need to have, these reasons. If you're sick and you got cancer, or if you want to help your kids get a college education, or you have these kind of strict qualifications, you can do that. And there's a cap. Because that's what we control, how much you can borrow and why. Now, is that true?
Yeah. There's some of the same restrictions exist in the solo 401k environment, but many of the restrictions imposed by companies are actually imposed by the firms administering the 401k. Because if everybody borrowed their money out, their ability to bill you, and this is one of the problems with corporate 401ks, you as the employee are paying for that 401k. That's why your returns are limited, because a lot of your profit's going to support the plan. If everybody borrowed their money out, there wouldn't be enough there so they put limits on it. No, you want to further your education to further your own role in the company? Yeah, we'll lend for that. You're in dire straits. You're going to lose your house or more. Yeah, we'll let you lend for that. Medicals. But anyway, it's usually along the continuum. The really strict companies say, hey, no borrowing whatsoever. So you could be working for a firm that won't let you borrow at all. Now, if you're in your own environment, if you have your own solo 401k, you can borrow up to $50,000 or 50% of the account value, whichever's least. So if you got $40,000, you can borrow 20. If you got $100,000, you can borrow 50. But again, that money's imminently available to you. There's no taxes due on it. It's not a distribution. And you use it to flip a house, use it to think of this, Brian. If I were to become your student,
right,
that is a business expense. Right? That's education to further me in my business.
Right.
So I could borrow money out of my 401k, pay your fee, deduct that because that is a business deduction. And then as I pay my loan back to myself on you, I get to deduct that too.
Oh, that's awesome.
And I'm making money with you every step of the way.
Mm-hmm.
Second thing, and this is I'm very excited about, you get to choose, because you're the guy calling the shots, so you get to choose how you structure your loans. You can either pay it back monthly or quarterly. Monthly payments are much smaller, obviously, right?
Yeah.
If I choose monthly payments, I can postpone my first payment up to 3 months.
Wow.
So I can borrow money out, postpone my payments for 3 months, start making money with you, and deduct the interest and actually the cost of some of that as I pay it back.
Well, that's like Uncle Harry.
Tell me what's wrong with that picture, Brian.
That's like Uncle Harry throwing money at you and saying, pay me back starting in 90 days from now.
Yep.
You know?
Yep.
Well, that's awesome. Now, the reason we're going to do another video as far as how to get started and all the rest of this other stuff with a solo 401k. But, you know, I know it's around $3,000 to get it started and you can self-fund it. Is that right? The fees to get that done, something like that. So, you know, we don't want to have a blatant ad here because the places where I might post this video, they don't allow you to solicit, you know. But at the end of the day, you really, if you're in a current 401k, you have to deal with those restrictions. If you have an IRA, you got to deal with those restrictions. And if you have a self-directed IRA, there's even restrictions with that. So the solo 401k, if you're a real estate investor and you want complete control, is probably the best vehicle. Would you say that's true?
Without a doubt, it's the best. Yeah, not probably. It is definitely the best. Okay. You know, some of the other nice things, you become your own trustee. You're not dealing with third-party custodians who are asking for documentation. And obviously, you know, Brian, and it doesn't happen all the time, but every once in a while, something falls in your lap and you have to be able to move quickly.
Exactly.
You cannot move quickly with an IRA. You need all sorts of documentation. They might have another requirement. You fill in all the blanks and they can come back with another. I was once asked for an attorney comfort letter. I don't even know what that is.
Right.
Okay. Solo 401k, you see a deal, you write the check, deal's done.
Well, I'm just very, very excited because I've got a lot of students that, they say they're broke, they've got a lot of money in their retirement, but they don't know how to pull it out. And, they really want to start a business and get rid of the JOB. But, I just look forward to your articles on solo 401k, and I'll have, a link below here that they can go directly to your site and get more information. Okay.
I appreciate that, Ryan. The other thing I want to point out, we all have more projects than money. Would you say that's kind of, we bump our heads on that all the time? Depending on who you believe, there's between $4 and $14 trillion in retirement plans floating around out there. Most of it's in the hands of the mutual fund companies. All right. And I don't say occupy Wall Street. I say escape Wall Street. Let's put the money where it belongs, and that's on Main Street. So if you have an uncle, an aunt, a brother, anybody else who would like better returns, you know, you're a real estate investor. You know what returns are available to you. Why let your brother earn 0.25% in the bank or take a risk in the market when he can earn a steady 8% funding deals?
Why don't you, let's do a little role play. Let's say that I'm one of my real estate investors students, and you want to coach me on what to say to my uncle. What would you say is the word pattern you'd use for that?
My very favorite line is, how would you like to earn 8% in safe and secure, fully insured investments?
Oh, I love that.
Now notice, Brian, we do not say the G word. All right?
Guaranteed word, yeah.
We don't say guaranteed
like
ever,
the
ever.
SEC giving us a hard time about raising private funds. We don't want that.
You know, I would rather have the feds, the IRS, lots of people after me than the SEC. Okay. So let's let it go at that. So we didn't say the G word. How can we use those words and explain them to who we're talking to? Well, first off, Brian, we teach people alternative financing, right? Mm-hmm. Everything we do is acquisition side. So we're buying houses that we're buying at deep discounts, or we're buying with little or no money down. So what do we have at risk? Right? We have relatively little at risk.
Yeah, we have,
in the big scope.
We have a low LTV, not a high LTV. They have guaranteed equity in case they have to repossess, right? Guaranteed equity.
Well, we have some kind of position that limits our risk. So when we buy something with no money down, or we strike a a land contract kind of deal where we're paying off over time, or a small amount of rental income. However we acquire these properties, we don't have a lot of money at risk. So that's safer than going out and paying retail for something. And that's a lot safer than going out. I mean, you can't walk into your stockbroker and say, I want to buy 1,000 shares of IBM at 20 cents on the dollar. Right? You can't do that, right?
Yeah.
But you can buy houses at 20 cents on the dollar all the time, or at least get control of them. So this is safe. Secure. We secure our loans with a mortgage. Make sense? So my deal goes south, you own the property. So we're protecting our investor, and they're fully insured, because when I buy a house, I insure it. If it burns to the ground, my lender is made whole. So they're safe and secure, fully insured investments. And people ask, how do you do that? You say, hey, get in the car. And you take them to a house. And most people have seen a house before. They know what one looks like, what one feels like. So, they're not looking at something like a mutual fund, which who knows what that looks like.
Well, nobody knows what it looks like. Nobody knows what a bond looks like or a share of anything. And you just pray that they actually pay you. We've seen Enron, lose 100% of value over a period of just a few months, or WorldCom, or other, at the beginning of the century. And it's got to do with the greed of the decision maker. Well, we don't have that problem with Main Street. We know what the value is. We know if it's a good property, people will always want to rent it, always want to give us money for it. And I always tell people, have some money in Wall Street, have some money in Main Street, and have true diversification, not just Wall Street. And if you do that, then who knows? You might have a great retirement, because real estate has always made more millionaires than any other way, not the Wall Street, but with real estate. So Mike, I want to thank you for this. This is awesome. I'm going to spread this to my folks. I hope maybe you could put this on your website. I'll get you the embedded code. You could just drop it on your website and have people listen to this interview. I think it's been drilled down and very clear. If you're a real estate investor or want to be a real estate investor and you're corporate and you have some money in your retirement account, or you're retired military or retired something and you have money in some kind of retirement account, why don't you put that money to work in a solo 401k? There's nothing better, right?
Yeah, and I know we're running out of time here, but Brian, so many people have been downsized, outsourced, laid off, or whatever the operative word for fired is these days. Right-sized. I heard right-sized just recently. A lot of people have old 401ks. One of my clients had 3 401ks floating around from previous employment. A confused mind doesn't make a decision, so he just left them where they were. Well, they're all in real estate right now, and he has full control of them. So you don't have to be retired. You just have to have had a 401k or an IRA in the past, and you can be in the real estate business very shortly.
That's just awesome. It's also good to get some kind of quality training at the same time.
Got it. Absolutely.
So you just don't have access to your funds. You can actually put it to work,
Yeah.
Thanks again, Mike. And I'll have your contact details below on this video. Thank you so much.
Hey, appreciate it. Thanks much.
All right.